Good morning, everyone. This is Manoj here from Market Ideas for Profit. And what we're going to do today is going to try and work out what the charts are telling us for the coming week. Now, today is the 25th of August. It's a Monday, and this is early morning, really early morning, before the markets have opened up all over the world. Even the Gift Nifty hasn't opened up. And we are looking at this chart of the Nifty futures and trying to assess what's the structure telling us and what is in store for us. So if you've already seen some things on the chart, that's part of the pre-analysis that I keep on my charts all the time because it tells me the broader structure. To give an explanation once again, what we've done is we've marked the swing high, previous swing, the significant swing high, marked the previous significant swing low. We've taken the range, we've taken the 50% level, and we've come to that 50% fib level with this particular marker, which is telling me that we have come down, tracked the lower end of the market, gone up, and crossed the 50% level, and now we are traced back. To give an additional understanding of what the market has done, what I have done now is taken this swing low as another marker and taken the current high as the current swing low and trying to get to that 50% level on the current leg of the price in the feature starting from the April, so first week of April to this is the weekly chart. So first week of April and the swing high that we got around the 23rd of June. That's about the third week of June. And we see now that we are retracing back and we're coming into that 50% fib level very closely. So these two important markers in the 50% retracement levels on the Fibonacci give a lot of understanding to me. Now, the moot point is when we went higher, we crossed that crucial 50% level, and we are now coming down to test that 50% level. We've already done, I'm talking about this particular swing leg, which is the one that was the major swing. Okay, so we've crossed that 50% from below, and generally what happens if you cross the 50% below, there are two things that can happen. The one thing that can happen is that, where did I lose my, okay, yeah, here we go. So one thing that can happen is if you go above the 50% level and then you start to retrace back into the zone which is below the 50% level, you generally tend to go and hit back the swing low. This is one option. This is one probability. The second probability is that you cross this 50% level and then you go on to hit the swing high, which will be the all-time high in our case. So what are we heading for is what we need to understand. So given that understanding, we've gone above the 50% level, we've come down in that sweet zone of 50 to 60%, which tells us that from here we can go up and get into that swing high once again. And this is exactly what I think is happening because there's a telltale sign. What you see here was there was a significant resistance. There was a significant fair value gap, which I'll mark now, which was breached from below in the last week's action. So what happened was on the 15th, the Prime Minister announced some relief measures on the GST, and that propelled the market last Monday. We went up, but we were not able to sustain the higher levels after the breakout. And because of all the geopolitics and the Trump scenario and the tariffs and everything, we've not been able to go higher. But what we've done is we've come to test back that level of resistance that we crossed. So could this be a story where we cross the resistance level, which is now turned into a support? We are coming back into that level and we are testing that support, and maybe we'll take a bounce from here again. Because what we've seen is in Friday's session in the US markets, there's been some relief indications on the interest rates that were not being reduced by Jerome Powell in the Jackson Hole summit, and that has created a good sentiment in the US markets. And we saw a good rise in the US markets on Friday based on this news expectation that there will be a rate reduction in September. And because of that, the Gift Nifty has reacted positively, and we are opening at 100-point higher currently. I'm saying currently 100-point higher than where we closed on Friday evening. So that tells me that this support, this resistance turn support could be something that can act as a support, and we could go higher. Now, in the eventuality that we go higher, what is our first level that we could be tagging? So taking that cue of the 50%. Now here we're not come down to the 50%. There's obviously, if this resistance turn support breaks, we'll come down, and then probably we could test this level of 50%. So that could be something that we could do. There's a 24,000 level that I was expecting when this move was going down, but the Prime Minister's news gave us a little bit of relief and we went up, and that relief is now telling us that we've crossed one significant resistance level and gone up. So that is making me hopeful that we'll go higher. So we could test this, we could go higher, and the first level that we could get to is somewhere around this area. This should be our immediate target for the first level that we should be tagging if we keep on going higher. So 25,944. But we've been having some significant resistance around this area. So let's take this resistance as our first level of call. But I feel that we've been tagging this level once or twice, and this is imminently going to fall, and we will be at 25,944, 2600 very soon. So 25,400 is the level to look at in this particular range, in this particular cycle. And I think in this week, even if we tag 25,400 or maybe 25,400 to 25,500, that should be a good move in our ultimate destination of 25,944 in the immediate scheme of things. So that is my expectation from the Nifty. Now, this is a broader term expectation. Let us drill down to the 30-minute or the 25-minute and see what we can expect on Monday. So here goes. This is the 30-minute. I'm just going to try and make it a little more visible. Yeah, there you go. So you see, we are at a beautiful line here. And on the 30-minute, this was the Monday low. So if you see, we have just closed right where we started on Monday, and we closed also on Friday evening just where we started on Monday. And this was a gap up. So we could say that this particular move down has come to test this gap. Now this gap hasn't been closed as yet. Now if we go higher today, the first thing that we need to see is that if we open above this little resistance, the red area that you see here, this little red area, this is the area that I would watch out for. If we open above this area, 24,942 is when we can stay bullish. We want to stay above, open above this area, and maybe sink into this little support, but then eventually bounce back above this 24,942. If we do that, then I'm very confident that, though this looks like a huge resistance, but I'm very confident that then we will get to this level of 25,089, most probably in today's trade. We could aim for this, and then we could aim also for this level, which is 25,175. So what are the scenarios? The scenario that we built is that we open higher, we dip into this little bit of a support, the resistance turn support after we open higher, we move up, we take a little bit of a pause in these areas, and then we go on to do this in maybe not today's trade, but significantly over the initial part of this week. And what happens if we go lower? Because things can happen. So if we go lower, the first marker to watch is this particular line here. I'll put a price tag to this. And then if we go lower, then we could get in lower areas. And then I expect the next support to come in somewhere around here, which is what I'm going to mark. So I'm going to turn this into red because that's the one that is going to take us lower. I'm going to mark this for you guys, right? We'll mark out this level. I'll mark it out here, right? So 24,910. And then essentially what we need to mark is first is going to be this level. Yeah. So we're going to mark that. This is going to be the first level that I'm interested in. And then this will be the second level that I'm interested in. We could drag this lower. And these are the two markers that then we could target. Right? On the way, you will see some more support here. Yeah. So this could be like something like this. And I'd mark tag this for you too. So these are the levels to look at in Nifty. The trajectory going up will take you here. The trajectory going down will take you here. This is for the immediate 2, 3 days going forward from Monday, Tuesday, Wednesday. And in this greater scheme of things, I've already shown you what we should expect on the daily chart. I expect these levels to come 25,175 and then significantly on to 25,946, which is what I think we should be getting in a few weeks from here. So that's it for the Nifty guys. I hope you understand what levels we are working with, and you keep your markers on the levels. You can take a screenshot, keep your markers on your charts and trade from level to level. If you have any questions, feel free to ask, and keep watching my videos and taking cues, because if you've been watching my videos, you know we are very close to what we always get very close to what we project. Now, to turn that into uh, trades that make profits for you is another challenge. But yeah, knowing the levels is the first thing, and then converting that knowledge into profits and another thing. If you need support in any of these areas, do get in touch with me, and I'm all there for helping traders who are struggling with their trades. Thanks a lot, guys. Look forward to seeing you again in the next one. Thank you.